Good afternoon. Welcome to Stay at Home and Learn About the CARES Act, the individual provisions. My name is John Sheeley with Tax Practice Pro. We're happy to have you with us today. My longtime editor and writer and proofreader and all-around bounce-it-offer person, Ellie, is actually going to do 2 hours, 100 minutes for us today, and I think that's exciting for her. I mean, the rest of you, it's not so exciting. You don't get to listen to me for 100 minutes, but you will get to hear from the great Ellie. There's a copy of the slides available for you up in the hand. Actually, I'm lying to you. I think I need to pop it in there, but up in the handouts section, the slides will be there. Right now, there are 2 other handouts that will be referred to that you can download. If you have any questions, there's a Q&A tab that you can pop into. General chatter, you can pop into the chat box. So continuing education will be emailed to you. It'll take us about a week. These 2 webinars were pretty full. You'll get an email that says this is your certificate from Tax Practice Pro, your Tax Practice Pro completion certificate, and it's a PDF, but you can also download it. It will be, if you've taken anything from us in the last 3 years, it's available for you up in the taxpracticepro.simplecert.net/portal/login, or from my website, click on I need a copy of my certificate from taxpracticepro.com, and all of your certificates are in there. It's a beautiful thing. So if you don't get that, check your spam. And if not, you can call here or email. Call Nicole or email Nicole, Nicole, at taxpracticepro.com. It's a copy of our sample certificate. So we're awarding for this program 2 NASBA CE and 2 IRS CE, whichever you need, or both if you need both. There'll be 6 polling questions during the session. NASBA and IRS rules require you to answer 3/4 of them, so I'm good with 4, but please try to get 5. You don't have to answer them correctly. We think that you should. You need to, as I said, answer at least 4 to get full credit. You have to be logged in for 100 minutes to get full credit. I can't alter either of these things, as nice as you are and as nice as I am, because the IRS and NASBA don't believe you. You have to meet the rules. And Ellie, I'm going to turn it over to you, whatever you want to do and say.
Oh, I made something disappear. Oh, there it is. Hi, everybody. My name is Ellie. I am an apprentice at BQ Tax and Accounting. You may have heard Fred earlier today talk about business stuff. So we're not going to talk about business stuff for the most part.
Can we talk about Fred?
We'll talk about Fred, always. Free, fun topic of conversation. My kid is in the background, so you will hear him. So sorry about that. And thank you, Leah. And yeah, I'm getting over a cold, so I might run away to go cough out a lung, and I apologize for everybody. But John knows what's going on, so he can pitch in. So, objectives. And you see I put a little now and later there because we're talking about stuff that will affect you now and your individual clients now, and then things that will affect you later. Okay, this is a shout out to Fred. He's so awesome. 10-10 on a scale. He goes to 11. So the first thing we're going to do is we're going to review the provisions of the CARES Act as it relates to individuals. These are basically individual taxpayers who may or may not be doing self-employment. I will say that we're going to spend some time on the stimulus check, aka the economic impact payments. And we're also going to be talking about the unemployment compensation because until yesterday, those were most of the questions that I was getting. You guys are probably getting more SBA loan questions, particularly from your business clients, but I deal with a lot of people who are mostly wage, maybe have some small Schedule Cs on the side. So they're really more concerned about how the unemployment will hit them. We are not labor law attorneys. I might put into the chat box this really great link on a summary of labor law for sick pay from a law firm called Littler. And they do really great blogs pretty much every day about COVID. And I recommend them as a resource to go look at their library if you have questions about sick pay. And so, yep. And one of the things I want to talk about is, how we're going to communicate this stuff to clients. So we have a syllabus, stim check, unemployment compensation, fun bunch of potpourri that might affect your small guys. And then I just want to talk a little bit about what IRS is doing right now. IRS has shut down some things. So we're going to talk about what we can do about that. And then the later portion, tax 2020 considerations. So
And of course, we'll stay on for questions as long as all of you want to stay on and listen to us.
All right. So one of the things you guys see here is an infographic. I think infographics are a great way to communicate to clients. You can put them on your website. You can put them on your social media. I follow IRS on Twitter, Facebook, and Instagram. Their Instagram page is hilarious. Like last year when they were talking about cyber protection, they were posting pictures of bugs. Like it would be cockroaches, information from IRS. So, and they get lots of hits from people, and lots of people respond to their Twitter. If you don't have a Twitter, a Facebook, or an Instagram, you should look at getting those. If you're more comfortable with Facebook, use Facebook. These are really easy to make. There's a website on there called canva.com. They allow you to make some of these for free. And it's basically point and drag. They give you the template. You delete the text and write what you want. We on BQ have these on our Facebook page and on our COVID-19 library that we have on our website. It's really great because if a client calls and they're like, oh, I want, for example, to talk to Fred about CARES Act and how it helps me. You can say, okay, you know, this is what we can do, but also check out our infographic here, and it can help them narrow down maybe the focus of their question. And then also on there is easily.ly. That's also a really easy place to make infographics. All right, the economic impact payments. So you may have heard those also called the recovery rebate and the stimulus checks. On the IRS website, they're calling the economic impact payments. And so that's what I'm calling them. As we all know, it's $1,200 to individuals, and that's single, married filing separate, and head of household filers. And then $500 for each dependent that meets the child tax credit criteria. It is $2,400 for married filing jointly. Each person on this return must have a work-eligible Social Security number. If anyone on the return has an I-10, the check is rendered invalid. In the handouts, I have created a Word document called COVID-19 Resources. It's a Pathfinder. And in there is one of the things on, it's by the ACLU, and it's a summary of the FFCR bill and the COVID-19 bill and how it affects immigrants, including people who are undocumented and people who are here on certain kinds of visas. If you're working with a population like that, it might be a good resource for you to help you understand how this might affect them. And it doesn't just address the EIPs, it addresses things like the unemployment compensation, the health provisions, the sick leave. It's a really good summary. And so as my first example, I chose Mando Dad here with Baby Yoda. They both, you know, Dad has a work eligible Social Security number. It's how he gets paid through the Bounty Guild. And then you have his adopted child here who has an adopted tax ID number, $1,200 for Dad, $500 for the child, $1,700. That buys a lot of gas in Star Wars. What I have here is a nice chart. Thanks, Erica. I like charts. I like flow charts. I like decision charts. So basically, different statuses, base amounts, and then your phase outs. It appears that each dependent will raise the amount of phase out by $10K for each AGI. And then the Washington Post and Forbes both have EIP calendars. The links are in the website. You could put that right on your website. And clients can go there and see like, oh, this is what I should get. I don't know what I will get. Addressing two of the questions, will the $1,200 IRS EIP check be intercepted if the individual taxpayer owes IRS money? No, that's addressed later on. The only two things that we know about that the check will be taken for will be child support, unpaid child support, and I forget the language. Federal crimes restitution.
Right. That's it.
It's like, what's that name? That's a nice shirt, John.
Thank you. Well, you were talking about Yoda there, so I went and got it.
I tried to make it interesting. I need my baby Yoda fix.
When tax professionals are happy with something I do, they send me things. This got sent to me. So
very cool. And yes, Jamie, if the spouse has an I-10, it completely invalidates the EIP for everybody. So even if there are U.S. children and both parents or a single parent has the I-10, it completely invalidates it. I'm not sure about that, June. That's why I also linked the Forbes one. I'm also going to put a link in here right now. Should all pop up in your chat box.
So that neat little pop-ups there was shared by Joseph Clemens, an EA in Colorado. And I texted him, could we use it? I didn't hear back. And you know me, I'd rather apologize than ask permission. So there it is.
So the link that I just put in the chat box, this popped up today. TurboTax has a relationship with the IRS right now based on their press release. And this seems fairly accurate in terms of their calculating the EIP.
Do you have a link you want to share on the screen?
Sure. Can I do that?
Oh no, you can if you click the screen box up in the upper right. You should be able to share your screen.
I'm gonna have to move it into another window. All right. I also put it in the chat right there. Basically, I was playing with it. What they are having people do, if you are not required to file taxes and you're not receiving Social Security benefits, you can use their stimulus registration in order to get your direct deposit information to the IRS in order to get your stimulus check.
Can I add something here to your good work in finding that?
What?
Not that we want to promote the evil Intuit Corporation, but I would probably stick that link on my website, and every inquiry and everything I got from somebody about what do I do and how do I do it, I would probably send them to that link. It's a good service and minimizes the amount of time you'll spend with folks on the phone. Anyway.
They say it's in partnership with the IRS. What I'm sharing now is their blog post on this, which I'll link and put in the chat again. This sort of came to my attention when Fred was giving his presentation. I'm not entirely 100% sure how it works. I'm assuming maybe IRS is trying to reach the free file people. I don't know. I'm
sure, Ellie, I'm sure there's a disclosure in there where they are disclosing, they agree to give up some personal information, their name, their contact details.
You have to register with TurboTax, and then one of the things you do is that you give them their bank account.
Marketed forever. They'll market to you till you die.
Yeah, I don't. So this is a nice chart. It's a flow chart, a decision chart. Helps you figure out, what we should do based on someone's current status for 2018, 2019, 2020. I think it raises more questions I know what I'm going to say. So let's move on to dependents. I feel like that's a good one. So as the law is written, the same test for qualifying child is used for determining the $500 credit. You must be 17 or under, and you must have a valid SSN or AITN, which is the Adopted Information Tax Credit Number. If the individual is being claimed on another's return, they are ineligible. So I have this client. He works as a bartender. He takes care of his mom. He claims his mom as a dependent. He'll just get $1,200. He can't claim her, and she's not going to get a check either because she's being claimed on someone else's return. Also, if you file a return but can be claimed as a dependent under Section 152, you won't get the EIP. And that's important because you're going to see a lot of people. Oh, sorry. Thanks for catching that, Kathy. It's just under 17. Sorry about that. You're seeing a lot of questions now. I'm seeing a lot of questions now on Facebook and Twitter of people talking about, well, what if I take my child who's college age, take them off my return as a dependent, and have them get their own, file their own return and get their own thing? And I don't know how IRS is going to do it. Like, how are they going to apply the 152 tests to each person in the system? And that's actually something that Nina Olson talked about in her procedurally taxing blogs that she's been writing the past couple weeks about how this is problematic. One of her other things is that, the IRS is conservative and it's more enforcement based, and they're getting pressure to just sort of push these checks out and then make the adjustment later. And yes, Sandra, that's a thing. If parents want to try to take their child off, they're going to have to pay back that American Opportunity Tax Credit. And is that really worth it compared to what your gain from the check would be? I don't think so. Also on Twitter, certain congressional folks are talking about a phase 4. Now, just because there's a phase 4 and they're talking about it on Twitter doesn't mean it'll actually get out of committee or anything like that. And part of phase 4 would be getting some money to college-age people, particularly college-age students who maybe don't live at home, don't have a way to get home, and whose federal work study is sort of shut down. And then I put the link, which should be in your handouts, of the definition of what counts as a dependent. This is something that, for those who watched Tony Nitty, he talked about a little bit, and I thought it was really good to provide that sort of citation, because sometimes I think people just think we're making it up. And it's like, no, look, here's your citation. Also, I get to sound really smart when I sound like I'm dropping code section, even though I'm not a code head. And then I basically, same example here, David and Justine. What I talked about.
We saw this, Ellie, back, if you remember, when the Affordable Care Act actually mattered for tax purposes. It currently doesn't because the penalties are waived. But we used to have this argument with people that would say, well, I'm not going to claim him, even though they could. And, it's not a matter of, is it optional? You either are or are not a dependent.
Yeah, and I think that's what's going to make the true up really interesting. So, to Cynthia's point, what about parents who take a dependence in alternating years? The way that I understand it working right now, and IRS could come out with some guidance in the future, all of this is really fluid right now. Someone claims the child 2018, they haven't filed their 2019 taxes, they get the EIP with it, but then when makes sense if it's alternating years. 2019, they claim a dependent that they won't claim next year on their 2020 return. They'll get the credit for the child based on their 2019 return. Then on 2020, they'll do their true up. It won't show the dependent on the return, but they don't have to pay the money back. So it's totally possible for one parent to get $500 this year, and then next year, when the other parent does the true up, they'll get the additional $500. Ms. Olson, Dr. Olson, is she a doctor? I don't know. Was talking about how IRS is very enforcement minded. And one of the things they might want to think about doing is tracking how many times a child is paid. But then you have to think about low income families and what kind of impact that has on them. So procedurally taxing is the name of the blog. They've been guest starring people who are brilliant lawyers, writers, tax professionals, people who work in VITA and LTC clinics. And there have been a whole series of posts this past week on the economic impact payment. Many of them are looking at how things worked in 2008 because, I don't know, I was just a child. I guess something like this happened with President George W. Bush. And that's why there's a lot of questions about how long rollout's going to take. Because I guess in 2008, it took a really long time for everybody to get their checks.
Who's VITA and LTC?
Oh, VITA is the volunteer income tax assistance. Yeah. Their clinics. They help low-income people be able to file their taxes, and LTCs do the same thing, which is the low income taxpayer clinic. What's great about LTCs is that they can do representation work. And actually, one of the first tax presentations I ever went to was by a guy who has an LTC in Chicago, and he did mostly a lot of appeals works and OIC's work. And they work with a lot of low income people. They work with a lot of clients who don't maybe have the access that other clients do to internet, telephone. They don't have the resources to try to defend themselves against IRS, and they do that for them. And actually they addressed that, I think it was Monday or Tuesday, about how there are people who are going to need to get their stimulus checks who, for example, homeless people. How do we get them their checks? Like Social Security is direct deposited if they're homeless and they have Social Security and they have access to a bank. Great. But what about other people? What about there are some things I think IRS is going to have to address. They set a deadline of the 13th for starting to roll the payments out. So I'm assuming that within the next week or so, we're going to start seeing press releases from the IRS addressing some of these concerns. Sarah, I believe if they were 16 on the 18th, I don't know if IRS has a birthday database. I think based on how I understand it, they will get the $500, but when they do the true up, it'll show, they got paid $500 too much, but they don't have to pay it back.
As I understand it, the IRS has a year of birth, which you have previously provided somehow. And if they don't, they match what you provide against the Social Security database, right? The last 4 digits, the first 4 characters of your last name, your Social Security number, and the 2-digit year of birth. So that at best, that's what they have.
If to Ms. Sanders' question about disabled dependents, if they are claimed as a dependent, they're not going to get anything as it's written now, which is really unfortunate. And I believe one of the things that was talked about in a potential phase 4 would be what to do for disabled people, because right now there's a lot of things in both CARES and FFCR which are not very helpful to the disabled community and are sort of leaving them behind. Anne Marie, according to the IRS, they're going to start sending payments on April 13th. I'll advance to the next slide, which I believe has that information. So IRS wants to send these out by direct deposit. It's faster, it's safer. If they can't get a hold of you via direct deposit, they're going to send you a check. Within 10 days of them sending that out to you, they're supposed to mail out a postcard to you saying, hey, we sent you your payment. This is how we sent it to you. One of the things I saw yesterday was that they are going to try to set up something called Where is my EIP, very similar to Where is my refund. So people can log in and check where it is on that, which I think would be great. If a client hasn't filed 2018 yet, they need to file it as soon as possible. There it is, only held for unpaid child support and federal crimes restitution. I had to ask Kathy about that, Kathy Morgan, yesterday. I was like, what is federal crimes restitution? She's like, if you get arrested for financial crimes. So I guess, maybe Wesley Snipes would do that, but maybe he makes too much. I don't know. Yes. So technically what it is, Laurel, is it is an advanced payment of a refundable credit. That is technically what this is. And I put some things I saw here. What about clients who are divorcing? What about innocent spouse cases? Like, that really concerns me. If you're an innocent spouse, and you were with a person who had, your innocent spouse is arrested on domestic violence, how are you going to get that money back? And I think that's something IRS needs to address. I'm hoping it's something that they will address. Again, everything is really fluid, so ideally something will start coming out with the next week from them. Cliff, you asked about bank products. I am familiar with Santa Barbara bank products. They said that if they get the checks, they're going to be working as much as possible to get it out to people. And as it stands now, they will not be charging a fee for that. That can change.
I seem to remember in 2008 that the IRS is aware, or Treasury is aware, of the routing numbers for the RAW and RAC products. And I thought they were able to exclude them, but maybe not.
That is a great question, Susan. Susan asked when is the date the IRS is basing on what return they are looking at? I'm wondering if they're going to start sending it out the 13th, or is like April 3rd, April 4th, 1st going to be the date that they're going to be looking at. That's not something that they've addressed yet. I'm assuming it's something that they're going to have to address in their FAQ about this, and hopefully this week. I'm not sure about the direct debit, Linda. I do know that they said that if you have used direct deposit to pay the IRS, or like I owed money this year, I just had IRS take it out of my bank account. In that situation, they should be able to use that information to give me the return. It's not taxable income. I actually had someone Facebook message me this morning, apparently, and she's a lawyer. There's a lot of rumors that this is going to be taxed next year. It's not going to be included in your total income. It is a reconciliation. Thank you. For those who can't see that, Lola has said that River City Bank also said they would not charge to forward the stimulus. And I feel like this is pretty clear. Now, one of the things that I saw that both NATP put out and that's in the IRS is that economic income payments are going to be going out till 12/31/20. So, if they have no information on file for your client and you send in 2018 in the next couple weeks, I believe it's just going to be on a rolling basis. I understood that in 2008, they sent it out based on the last 2 digits of your social security number. John, is that true? You were around then.
Thank you. Yes, that is correct. It was based on your social security number.
Yeah.
So we're going to ask you to hang on to some of these questions till the end, because some of this stuff is going to be covered in the material. And to be fair to people, we want to get the main stuff done in 100 minutes.
Joan, if someone passed away in 2019, I assume that Social Security has been made aware of that, and they'll get that information over to the IRS. I see in the Q&A things. I hope I'm pronouncing this right. Ms. Harvey asked where the resources were for visa holders. In the handout section, there's something called COVID-19 Pathfinder. I linked to the ACLU blog that talks about the FFCR and the CARES provisions for people who are immigrants, including undocumented people and various visa holders. Colleen, if the parent can be claimed as a dependent, it might mean that they won't get the stimulus check. The blog post I mentioned is called Procedurally Taxing. I think if you just Google it, it should come up right to it. They also have a Twitter where they link stuff. And my girl Nina was there. Okay. Anybody else have any questions? Are there stripper poles? There is no stripper pole in my house. Sorry about that.
Jerry has a question. Well, what about people who passed away in 2020? And I would think if the social security number is locked out already out of the database and they're not going to send a check, I would file a final return and you'll get the credit on the final return.
I think it's time for a polling question.
It is. I was just thinking that. It's a good thing I already wrote one. So,
do I have to answer these?
No. No. So one of my many future ex-wives is chiding me that I don't have lawyer as an option. So of course, what is my professional designation? We've added lawyer. So you need to answer 3/4 of the questions. You don't have to get it right, but we sure hope that you do.
I'm sorry I'm not as entertaining as Fred, you guys. This is why I'm a tax apprentice. Part of my apprenticeship is learning about how to be entertaining. Where is that link?
Wow, we have 100% participation by folks, so we can move on. 1% of our attendees are lawyers. 67% are enrolled agents. 15% CPAs. And 9% identify as AFSPs, 7% as PTIN holders, and there is one bystander. When I look at the reports later, I'm sure that that's going to be Fred. Just my guess, if I had to guess.
Okay.
The whole rain's starting over there.
Thanks. Oh, Sawson posted the link to Procedurally Taxing. Jedi Apprentice. I wish. Fred's more like a Sith person. So last week on Sunday, I did a Facebook Live with my city council. So like people like regular Joes and Janes who may or may not have a tax person could ask questions. And guess what I got? Most of my questions about unemployment compensation and the stimulus checks. The answer that I gave to a lot was, I am a tax professional. I am not a labor attorney. This is outside my wheelhouse. Here are some references for you. I'm going to put a really cool link. I think I put this in the COVID-19 resources. I'm putting it in chat. Littler is a labor law, employee law, law firm. Their news and analysis and their press releases are really useful. They're doing a really great job of breaking down FFCR. They have some free webinars on there, which maybe you could push out to some of your clients if they have questions about it. So it's a really nice breakdown of the unemployment expansion. And so what it looks like right now is that they're going to create a temporary pandemic unemployment assistance program. What that looks like is if your state, and this will be state by state, has a disaster assistance program. So like, let's say a tornado blew through a place and they used disaster assistance to help people while they didn't have a job. If they have a program like that, this program should be set up similarly. We don't know yet, though. They have 30 days to put one together, which is really hard, I think, for self-employed people because this information is out there and they want to apply. And states are like, I'm in the state of Ohio. We do our unemployment through Ohio Department of Jobs and Family Services. They posted on their Facebook today, like, we don't have this yet. We're working on it. Other cool things in the unemployment compensation benefits are extended an additional 13 weeks. The unemployment is going to increase by $600 a week for 4 notes. Many states do not have a mechanism for distributing this yet. So many people are like, hey, my unemployment hasn't gone up. Well, the states don't have the money yet. It's going to take a few weeks to get this out. Our national benefits average are $385. So the way that works is that would increase the average to $985 a week for 4 months. And what's cool about the pandemic unemployment assistance program is that it covers those that are not typically offered unemployment. So gig workers, self-employed, independent contractors, and it's important, those that would have otherwise exhausted benefits. So if you've been long time unemployed, you're near the end of your 26 weeks, this will give you 13 more weeks to get through. You will receive benefits if you are unable to work, you're working reduced hours due to coronavirus. It's really important, though, if your employees are saying, hey, I want to get this unemployment, if they're able to telework, they are ineligible for the unemployment compensation. So that's really important. Renata, as I understand, there's $600 supposed to be retroactive back to mid-March. Again, the states are working on how this will work. The way that the bill is set up is they provided extra money to labor in order to be able to give the money to the states so that they can get this out. But that doesn't mean it's going to be out today. I know in Ohio, we're trying to hire 1,000 more people for our unemployment department because there's just not enough to handle all the calls. In the state of Kentucky, they're making you apply by the last digits of your social security number. Yes, I can go back to the last slide.
All the states are doing some level of staggered registration, and you hear the same thing, is that everybody and their brother must be trying to register because the systems are overloaded. Only because I listen to Governor Cuomo every day. His budget director said the other day that in a normal week they have 50,000 calls, and they had something like 6.8 million last week and 2.2 million on Monday. Can you imagine that level of overload, 40 or 50 times your normal load? Systems can't handle it. They're not designed for this level of catastrophe.
June, I just did a quick Google search. It's definitely not exhaustive. There hasn't been anything yet that addresses what happens when it goes into your IRA account. I'm imagining that IRS is going to drop a FAQ soon, and that would be something that they address. Because, it's something that people do. Okay. This is just something you should be aware of if somebody calls and says, hey, am I eligible for unemployment? Again, we're not attorneys, we're just tax people, but this is a question that we're going to be getting. So I put a link in here. Vox, which is a online journalism site, had a really great breakdown of what this unemployment compensation and the pandemic program looks like. It also includes a nice little chart of what the average benefits are for each state. I did not realize that the minimum benefit in California is $81 a week. And as someone who's originally from California, I'm trying to think about what I could get by with $81 a week. And I think maybe filling up my car with gas. Not really sure. John answered Pat's question. It's a good question. John, do you want to read that aloud? That's a really good one.
Oh, I think they can all see the thread, and I was looking up to see the state. So the money coming from the federal government is coming from the federal government. It will not affect the underlying
suitor
rate of the experience rating. So it shouldn't affect it. But of course, most states are also based on the overall balance in the fund. New York's fund is going to be bankrupt in a couple. So I would think everybody's rates are going up anyway, regardless of their experience rating. They just have to.
Yep. In the Pathfinder, the Word document that you should all be able to download, I put in the Department of Labor resource. It was yesterday that they released their guidelines on this program. You could just give it a view if you wanted to, make it available on your website. The Vox link is really great too. Good for a quick read. So the states have the option of providing the $600 a week extra all at once or per week. I can't imagine they're going to do it all at once, honestly. I'm trying to imagine in what scenario would that pay out better for the state.
You know, there was a discussion on the NATP Georgia Facebook group, which has several state of Georgia employees on it. And they were talking about how this is going to work. And apparently the state has to formally adopt in. And like, as of the other day, yes, Georgia hadn't adopted to take the $600 a week. And everyone's just shaking their head, you know, why? So, yep. Yeah, it's very interesting how some of this is going to work. So I think some of your states are going to say, here's the money right away. Here's your $600 a week. And I think other ones are just going to jerk it around. I don't know why. But
yeah, I think they have 30 days to get it all together. The fourth point on this slide is in response to something I saw in a bunch of groups. If they quit work in order to obtain the higher benefits, that's considered fraud. And quite a bit of that DOA guidelines is about helping the state determine if it's fraud or not. If you talk to your employee and are like, hey, I'm going to let you go because this is more beneficial for you. We don't know how the future works. You know, you might want to talk to a labor law attorney before you do that. But if your employee goes, I'm going to quit because I make more on unemployment, typically each state sends a notice saying, hey, what happened in this situation? And you have to follow up with them. Ohio released a mass layoff form a couple weeks ago, which I thought was really interesting, but also really sad. But the DOL is really great. And then again, that Littler's on there, and Littler's all over the U.S. So if you're looking for someone to refer clients to who have labor law questions, that's definitely a firm. Maybe your regular attorney can do it too.
Hey, I just popped in a link that I hadn't found previously. It's dated last week from the National Employment Law Project. And it talks about unemployment insurance protections in response to COVID-19. But actually, most of it is about rates that employers are going to get charged. And it tells you which states have waived certain things. 27 states have waived that employees look for work. A bunch of states, 16 states, have said that the pandemic claims won't directly affect their rates, which is interesting. But of course, as Marta said a couple of shots back, well, eventually everybody's rates have to go up, and she's right.
And Mr. Inzi asked, what if you let people go and they do not want to return if you offer them back their job? Well, unemployment isn't forever.
Right.
I mean, that $600 runs out after 4 months. So, like, if they don't want to come back, they're going to have to go job hunting again soon. So
I think at some point, once the economies officially start back up, some of the old rules are going to go back, which is you have to prove you're trying to find work. the employer, New York, New Jersey, the Northeast states anyway, the employer can notify the Department of Labor, by the way, I have a job for that person. Can you send them in? And then, of course, if they don't take the job and have a reason not to, they lose their benefits. So these things are out there.
So this is just some basic information on eligibility. Many states are encouraging applicants to put COVID-19 in their application. As you said, Ohio said, put this special code in, and they put that on their website. Lots of states are relying on social media to put out their information. So if you're not following your state's unemployment agency, I think everyone has a different name, on social media, you should go ahead and do that just so that you're aware, just so you know where to refer people to as well. Because a lot of times I find myself in a librarian role where I'm just like, well, I don't know, but here's where you might find the answer.
Politics aside, we joke about Twitter and the use of it by politicians, but we have been waiting for the New Jersey Assembly, whatever they're called, to pass the law extending the due date to July 15th. And as soon as they did, the governor signed it. The governor of New Jersey went to Twitter and said, hey, I signed it, everybody. It's July 15th. And this goes back to the arguments about Mnuchin. Can he say on Twitter and make it so? Well, the answer is, yeah, the law doesn't prescribe how I have to communicate it. So I agree. Twitter and all these feeds, you should be monitoring them, signing up for these email lists.
Mm-hmm. Looking up something right now.
Hey, Ellie, would you just, I know you've seen the material somewhere, but people keep asking some of these same questions. Just talk about Treasury's going to put up an app to do what?
Treasury's going to put up an app to put in your direct deposit information.
Right.
We don't know when, but they're going to put up an app, and I'm seeing Get Transcript fiasco all over again. But they're going to put up an application where your client can put in their name, address, probably their last filing status, things like that, so that they can update the direct deposit. This line here, unemployment compensation is not considered a public charge. I put that in because I was asked that by a client who is going for his citizenship application. And one of the things the ACLU post mentions is that USCIS has basically cut back on most of their function. But as it stands now, this is not something that's considered a public charge. However, they should always talk to their immigration attorney first.
Yeah, one thing, so to that point, one thing that's been interesting with all the problems getting people registered, most of the states are saying, don't panic, we're going to retroactively pay you to the first date that you were unemployed. So in the case like with contacting the attorney, I agree you would contact the attorney. And what's awesome is if it takes 2 weeks to get an answer or a decision, you're not going to lose the money.
Yes. So self-employed clients. So I'm a BQ tax apprentice. If I wanted to, stop working for Fred because it's terrible, all you do is get made fun of all the time, and cry. And I went to go apply for unemployment compensation. I couldn't get it because I'm eligible to work from home. The way that it works is that each state's going to have to come up with a way for self-employed people to supply their information. One of the things I saw was what if somebody works part-time at a wage and then they're also self-employed? They want your employer information. You will mention that you're self-employed on the application, the way that the DOL is guessing or suggesting how it works. You're going to need to apply 1099 MISH statements if you have them. You're going to need your tax returns, invoices, potentially bank statements. So some of the things that the PPP loan is asking for self-employed people to put together for their application starting, I think, the 13th, you're going to need to potentially also tell your client, if they're interested in the unemployment compensation, to put that same information together. Yes. Sorry, Mr. Enzi. I-10 holders are considered U.S. tax residents under tax law, not under immigration law. They are not eligible for any of the EIP, stimulus, PPP, or EIDL. What I would suggest looking at is in the handouts, we have the guide to the ACLU blog that breaks it down. Donna, I don't see why you couldn't get both unemployment and a PPP loan, but I'm wondering if that's going to be something that they will include in their self-employment application on the state's page.
I'm wondering if the unemployment isn't going to be valid for the first 10 weeks, right? Because the PPP is supposed to be for 10 weeks. But in the end, I think that's fine anyway. Remember that the idea here is for people to continue to work to the best that they can. So.
Oh, sorry, I'm touching my face. I can't help it. I washed my hands. One of the things that you can do for your self-employment clients is to run a comparison of what the EIDL looks like versus PPP versus unemployment compensation, and then talk about which would be better for them and what their plans are. Mark, it's in the handouts. So some things you could put on your Facebook page, your website, whatever, for your clients to be able to see. Like New York State created this really cool graph, like how you're going to apply for unemployment. And then, not traditionally eligible for unemployment benefits. That is our self-employed people. Like I think Lyft already put a blog post about this out there. You can put that in there. This is a really great website that you can slide over to your clients. I stole this from Ohio. They used their social media to say, hey, if you can't work because of COVID-19, this is how you're going to fill out your application. I think it's really great. It's also really great to link to your website or your social media post. And then New York State put out this really cool thing here on their pandemic unemployment assistance program, how they think it's going to work. Boom, boom, boom. These checklists are great for staff too, because if you have staff members who are answering phones and you're busy working with people, you can refer them to your website or your Facebook page or wherever where you're posting this. And you're like, hey, you can go look at this and, so-and-so will get back to you when they are free.
One of the things we learned in this pandemic is you need to have the ability to quickly communicate with your people, whether it's via email, text, or both. And ahead of the stimulus number, when they finally signed the law, we sent out an email and the Washington Post link to everybody. And of course, once MailChimp did that, I had a link and I used that link in a text blast. And we maybe had 2 phone calls why people were able to self-help. I had more people reply back, thank you for the information, than called for information. So things like this are something that you stick in there and you email out to people,
And I'm a real visual learner. I know not everybody is. These sort of things really help me make sure that I understand what I've read. I've digested it correctly. All right, questions about the unemployment compensation. Again, we're not labor laws attorneys. I think Susan asked a question. How does it work if a client is still running his business but isn't making enough to pay rent, much less wages? Can he apply? The state's going to set up their eligibility requirement. The way that I understand it shouldn't be a problem, but then if you're their tax professional or bookkeeper, you're going to want to sit down and run a comparison for them on PPP, unemployment, and the self-employment tax benefits that they're going to get and the EIDL loan, and see which is more beneficial for them. I do wonder, and I didn't find an answer, and perhaps someone in here knows, can you get the EIDL grant and then also apply for unemployment compensation if you're self-employed?
I didn't see anything that said you can't, and I'm going to guess that you can, because they're 2 separate things. The EIDL is about economic damage, not about my inability to work. I'm going to put up a second polling question. So you can continue to ask questions of Ellie if you want while we do this. Remember, you have to answer 3/4 of the polling questions. You just have to answer it, but we hope that you answer it correctly. How do I mass contact my clients? I have a group texting product like Textalent. I have a group email product like MailChimp, Constant Contact. We cut and paste email. We don't contact people. You can choose more than one, or you should be able to choose more than one, whatever applies.
Laura, yes, these recordings will be available later today.
It's very generous of you to offer that.
You said it earlier in Fred's class. I pay attention.
I say a lot of things.
Ms. Sandra Voss, yes, the Department of Labor has released how they think the program should go. In the handouts, in the COVID-19 Pathfinder, I link to it, and then also in the PowerPoint, which you should be able to download as well. It's in there. The states are going to be able to decide it. Good comparative charts for what, Renata? Did you already address self-employed? Yes, it's a couple slides back. Each state's going to set it up through their pandemic unemployment insurance program. Your client needs to be able to have access to their tax returns, their 1099 invoices. The state's going to determine what they're going to need in order to validate the income that the client should be getting. Yes, all of the states are waiting for further guidance. The Department of Labor just released their regulations on Friday. The states have 30 days. I have not seen a chart on what is more beneficial of PPP versus unemployment compensation. I believe the business one that Fred just did had a chart on EIDL versus PPP. If not, I know on the BQ website, we have one available.
Fred and I are talking about, if we can find the time in the next week, putting together something on the business tax credits. And certainly that would come in, it would be planning for the Schedule C filer on what to do, when to do, and how this could all play out. And I see everyone has voted. Thank you.
I think someone said something like, but unemployment compensation is taxable. Yes, it is. And there is an option for them to have their federal and their state taken out. It's also important to let them know if they're in a taxing city, whether or not their city taxes it. Like I live in Cincinnati, I pay tax to the city of Cincinnati. They don't tax unemployment compensation.
A thought for next year, for those of you that do this kind of planning, most states, and correct me, Ellie, if you know of any that don't, most states, you have to go online and get your own 1099. So we can't do it. So the 1099 for state refunds, I can get yours online in most states, but the 1099 for unemployment, you need to log into your unemployment account and download it for me. So
Ohio mails their out.
Really?
Yeah, man.
Wow. No.
Farmers get stuff from the Department of Agriculture right now.
That's going to be my next survey. Does your state do that or not? But
you have to remember, lots of Ohio is still rural. We have parts in Ohio where there is not reliable internet access.
Wait. Governor Cuomo told us the other day, if you think that the coronavirus isn't coming to a town near you because you're rural, he said we have counties in New York still where there are more cows than people. So we're rural too.
I mean, I've been in Schoharie County. I believe there are more cows than people there, but it's very nice. Okay. Laurel, you asked, can't get PPP if you have no payroll, right? If you didn't sign up for the business webinar, I don't know how John's going to make that available. The way that PPP works, as I understand it, is if you are a self-employed person like me, if I wasn't working right now, I could apply for PPP starting the 13th, but I would be ineligible for any of the cool sort of payroll tax deferral credits that I'll be talking about in a few minutes.
You can, starting Monday, Schedule C filers can get a PPP.
Okay, I'm going to go to the next section. This is just sort of a potpourri of things that I think are really cool. Clients may ask about it. Student loans. Payments are suspended on federally backed student loans until September 30th. The money is supposed to stop coming out if you have it automatically withdrawn. But one of the largest lenders was like, don't trust us to do that, call us, which I think is probably a really good idea. It does not apply to private lenders. So, for example, I took out a small loan from KeyBank because I decided to stop working 3 jobs to go to school. And I still have to pay them back every month. It doesn't apply to certain kinds of loans, and I've listed those there. So the way that CARES Act has it figured is about 75 to 80% of people will be able to take advantage of this federally backed student loan suspension. State Perkins loans don't apply. And I have a funny story about New York Perkins loans. It'll be this really quick. I owed them 11 cents of interest on my final bill, and they mailed it to me. They're like, you owe us 11 cents. And I was like, it's 11 cents. So I taped 11 pennies and I mailed it back. Thanks, New York State. No interest until September 30th either. So their balance as of April 1 should be the same on September 30th. And if they're in the middle of a public forgiveness program, it's not going to count against them. It's not going to roll them back. And wage garnishment for unpaid student loans is supposed to stop. So again, this is just one way in which CARES Act is trying to get money into the hands of people so that they can meet their obligations. Yeah, I thought. Employer benefits. Fred talked about this briefly, but if you are an employer, you can contribute up to $5,250 towards each employee's student loan debt through December 31st, 2020. It ends this year. You're not going to be able to have it, next year, which actually the U.S. Chamber of Commerce was saying they're going to lobby it to continue because it is a huge benefit. Only 8% of employers offer it right now, but their retention rates are so much higher. And I mean, I can see it. I know a lot of my friends who have student loan debt would totally appreciate their employer contributing to it. It's great because it's tax-free to the student. It's deductible for the employer. However, as the student, you cannot claim the interest on the amount paid by the employer as a deduction on your return.
One other thing, too, with the employer paying it, it's not payroll on the employer's books. So no comp, no disability, no matching FICA and Medicare. It's a good deal for everybody.
Donna Byrne. Yeah. I see you, girl. Healthcare. I am not a healthcare person. I was trying to explain to my best friend in the UK, our friend gave birth. We have a mutual friend and she gave birth last night. And she was trying to understand how we charge for it. And I was like, I don't know, man. What's really great is that the CARES Act added that OTCs can now be paid out of FSA or HSA accounts without pre-approval first. And the one thing that's in there that's really cool, ladies, is that menstrual products can now be paid out of your FSA or HSA. So tampons, pads, menstrual cups, sponges, and other products is kind of vague. I was wondering, if those period underwear would be considered in there, which, gentlemen, you may not know what we're talking about, but ladies, I know you're feeling me. I was talking to my friend yesterday. She had to go buy some lady products. I was like, try to pay out of your FSA. And they were like, no, we're not set up for that yet. I told her to save her receipts because it's supposed to be retroactive. I'll save like what, $50-$60, but that's great. And now telehealth can be reimbursed by before the HD high deductible, high payment deductible is met. That also expires at the end of next year. And actually, I was reviewing a couple other things in the healthcare provisions. I'm not a healthcare person, but there's a lot of things in there that's trying to make telehealth much more available and much more affordable to people. That's important. Charles, if the student pays, whatever the student pays is deductible to them. So like, for example, if I worked for someone and they were paying like $400 a month for me, he would send the $400 directly to my student loan company. It wouldn't go through me. I would also be making payments. In theory, the accounting software for the government or whoever has your loan advisor should be able to parcel them out so your 1098E has the correct interest information. Every time you pay, though, you get a statement saying this is how much is going to interest, this is how much is going to principal. I would recommend everybody saving that.
Remember, related party rules prevent you from paying an S-Corp shareholder, any of your children or spouses, and if they're employees, paying them and taking this benefit, right? It's got to be an unrelated employee.
Here's just some more things. COVID-19 testing is supposed to be paid for. Medicare also got more money because a lot of people are losing their health insurance now. If you lose your job because of COVID-19, that is a eligible event. I think that's what the language is. So you can go back on the exchanges to try to get health insurance. So you can go.
Not the federal exchange.
Your state exchange, you can.
Correct. If they are a state exchange not run by the federal government, you can go on. But the federal exchange is a no.
Boom. Retirement funds. This is a nice benefit for people in the CARES Act. If you withdraw money from your retirement account and say that it is a COVID-19 related distribution, you don't have to pay the early withdrawal penalty. So it saves you that 10% penalty. The way that it works, it has to be you have to either personally be dealing with it, or a family member has to be diagnosed with it, and family member seems to be restricted to spouse or dependent, or you have to have an adverse financial consequence due to the virus. And then that can be repaid within 3 years, the tax on that, or you can treat it like an eligible rollover in 3 years. Defined benefits and loans. Okay. I'm going to be honest, I'm shaky here. So the way that I understand it is you can make a loan up to $10,000 within 180 days of the CARES enactment. Retirement loans with repayment dates up to 12/31/2020 will be extended for 1 year. So if you took out a loan from your retirement account, you don't have to pay it at the end of the year. You get an extra year right now too. There's no RMD required for 2020. This waiver is discretionary according to a website I was on. If you've already taken it out, like let's say last week you got your RMD, you have 60 days to roll it over into something. But you cannot have taken an IRA to IRA, Roth to Roth in the last 12 months before you get that in order to be able to roll it back over. And then any minimum required contribution to a single employer defined benefit plan that is due in 2020 can be delayed. And I found this cool little link. Basically, retirement companies are scrambling to figure out how to implement this. And so it might take a little while to be aware of it. Post it right here in the chat box. Excuse me. I apologize. And so again, the whole point of this is just to get money into the hands of people. I have this money now. What can I do with it? How can I, if I have a retirement plan, can I take money from it in order to be able to, pay my bills? Because maybe things are rough right now. I'm a millennial. What is a retirement plan? It's a joke for you, John.
Oh, I don't know what I am. I'm an Xer? I don't know. Hey, can I ask a polling question?
Yes.
What is the tax treatment of early retirement distributions during 2020? The rollover can be made within 3 years. I can pay the income tax over 3 years. There's no 72T 10% early distribution penalty. All of the above, none of the above. And keep in mind, you need to answer 3/4 of the polling questions. We hope you'll answer them correctly, but just answer them, and we can give you credit for being attentive, which seems counterintuitive. Ellie was also going to mention the COVID-19 Tax Professionals Best Practices for Tax Pros group.
Yes, if you're on Facebook, aka Facebook, there is a COVID-19 Best Practices Facebook page group. Is it a page or a group?
Group.
It's a group. We post things. We talk about things. Fred gives us Excel tests on the PPP loans, and we all kind of fret over what it means. And we share information as we find it. So this week I was posting a lot of those procedurally taxing blogs because I thought they were really useful, particularly if you work with low-income clients, because a lot of the people who write them are tax attorneys. So a lot of times they're summing up tax court cases. If you're not subscribing to this blog, I 10/10 recommend it, particularly if you want to do representation work. But then they do a lot of low income work. And I used to work primarily with clients who were 90% low income. So their blog is really useful in those rep issues. And then just sort of things with the IRS to be aware of. Hey, Kathy, in the next section, I'm totally going to ask you to help me out.
Okay, everybody's answered. So
the group name on the Facebook page is COVID-19 Best Practices.
I can share the exact name.
COVID-19 Best Practice for Tax Pros / Tax Offices.
Yeah, there's another group out there that's a free-for-all. You don't want to go there.
The blog address is Procedurally Taxing. If you just type in Procedurally Taxing into Google, procedurallytaxing.com. And you can sign up for it, and I usually get an email of a new blog post once a day. They also are on Twitter. I don't know if they're on Facebook. What is the reasoning behind giving $600 extra a week on top of unemployment? Well, Mr. DiPietro, I apologize for mispronouncing your name. The idea is that people are going to be out of unemployment for a long time, and they're not going to be able to meet their bills. They're not going to be able to inject money into the economy, and we're mostly a service-based economy. So putting money into the people's hands means that they can meet their obligations and that they can ideally go and put more money into DoorDash to have food delivered to their house, which then will spill into restaurants to keep them open. That's just my understanding. I'm not an economist. The idea is, I understand you're worried, but however, remember, unemployment compensation only lasts for a short amount of time. It doesn't last forever, and there are fraud statutes.
The $600 increase is only for 16 weeks.
Yeah.
So if you do the math, that's $9,600, which is the amount we all think we're getting out of those disaster loans. So the federal government has valued your time and health at $10,000 because they think if they give you 10 grand, you'll stay home. But seriously, the $600 it's only 16 weeks, and then you drop back to your regular state unemployment. Now, the federal government did back end unemployment in general. Your typical 26-ish weeks is going to go up by 13 weeks
to 39,
funded by the federal government, but it's only for the first 16 weeks of unemployment that you'll get the extra $600.
Thank you. Procedurally Taxing is also on Facebook if you follow it. And yes, Chelsea, there is no jobs right now for unemployed people to go to. That's why most of the states are saying, put in that you're unemployed for COVID-19. And most states are waiving the I looked for a job this week requirement. I know in Ohio, the governor's office just posted a link saying, there are 12,000 jobs in the state. Here's where you can go. I know Amazon is looking for people to work from home as part of their customer service.
Looking for 100,000 people.
Amazon's looking for 100,000 people?
Yes, ma'am.
Yep. And you can work from home. Okay. IRS compliance programs. You might be going, this isn't part of the CARES Act. Ellie, what are you talking about, you crazy lady? You are absolutely right. This is not part of the CARES Act, but it does affect our individual clients, and we're going to be getting questions about this from them. I guarantee it. IRS published a People First initiative, and that's what it is called on their website. One thing to know is that existing installment agreements, payments between April 1st and July 15th are suspended. They're supposed to be automatically suspended. I don't know. They're also not supposed to be sending any more passport certifications to state for seriously delinquent taxpayers. The IRS will not default installment agreements during this time, but interest will still accrue. So you will still owe them money. And then new delinquent accounts will not be forwarded to private debt collectors, which is good, I think. During this time, IRS is generally not going to start any new field, office, or correspondence exam. And they will continue to work refund claims where possible without face-to-face contact. And I think that's really smart. That's just me. I've got too many windows open. Pardon me for 1 minute. John and Mark Dombrowski just did a really great webinar about this. Is it available on YouTube, Mark?
It is on the YouTube channel. If you don't know my YouTube channel, I feel sorry for you.
If statute of limitations is about to run out, however, IRS reserves the right to start any of the above. So any audits, collections, etc. Kathy, I know you talked about that a little bit. I don't know if you have anything you want to add. Appeals is going to continue working cases using phone or video conferencing options. Field collections will be suspended except for high-income non-filers. And then automatic liens and levies will be suspended during this period. So no one should be getting a notice dated April 1st saying we've put a lien on your house. Ideally. Taxpayers will still have until July 15th to respond to the IRS to verify income or their EITC claims, which is good because that means if they have their money from their EITC claim now, they don't have to worry about paying it back until July 15th when IRS says, denied, give us your money. I really like the IRS. I'm sorry if it sounds like I don't. I put this quote in because I thought it was just so clear. I didn't think I could do better than what they're saying. You know, if the statute expiration might be jeopardized during this period, taxpayers are encouraged to cooperate with extending the statute. I think that makes sense to me. Kathy says that C-SEDS, R-SEDS, and A-SEDS are not going to stop, which is good for all but the R-SED. If you don't know what that means, it means the refund statute expiration date. So collection statute dates are still going to be aren't going to stop, so they'll still be running. You won't toll the statute. Is that what it's called? But if you're applying for a refund that you should have gotten a couple years ago and you didn't, you're kind of running on time. 90-day letters. IRS will issue notices of deficiencies and pursue other similar actions to protect their interests of the government in preserving such statutes. So if you're going to get a 90-day letter, you're going to get the 90-day letter. Those 2016 returns are due on April 15th. Thank you, Kathy. So people got a couple days to get that in. As of writing, PPS is down. eHelp is also down. The I-10 unit is closed for calls. CAF, blah, 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 blah. From my understanding from Mark's webinar is that Memphis isn't taking faxes, but Ogden is.
Yeah, but you know, we've been asking in a couple of places, Ellie, and I haven't seen anything. I check every day, right? We have tax help software, and I haven't seen anything that was sent from about a week before the shutdown forward. I haven't seen anything post.
I mean, so about 3 weeks ago, when I came back from New York last, I put in my FOIA request for my CAF unit, my CAF list, so that I could take some clients off. And apparently it didn't have an original signature. And so I've been working with them to get it. And they called me Thursday. So they're working from home.
Did you do a FOIA request online?
I did.
There is a disconnect that the field employees don't understand. I had a conversation with someone, and she said to me, well, I don't know that you, I said to her, I submitted it online. I'm not required to sign it. And she said, well, I don't know that you signed it on, that you did it online. I said, how do you not know that? And she said, because this gets assigned to me by my supervisor after they've looked at it. So the last couple I've sent, my opening paragraph says, attention, whatever they call them, not settlement officer, but whatever the title is. Please be advised, this was submitted on foia.gov and under statute does not require an original signature. Please call me at phone number if you have any questions. And then the last two FOIA requests I did since then, I haven't had a problem.
Yulia, I'm sorry, I'm mispronouncing your name. Can you provide some more information on that, please, on your question? On pending OIC applications, IRS will allow taxpayers until July 15th to provide requested additional information to support a pending OIC application. They are not going to close OIC requests before July 15th without the taxpayer's consent. Julia, thank you. Taxpayers have the option of suspending payments on accepted OICs until July 15th, but interest will still accrue. And IRS will not default an OIC for those taxpayers who are delinquent in filing their tax returns for tax year 2018.
I think
they do need to file it by July 15th of this year.
I think what Julia means is if there was a 2210 penalty, you don't escape the 2210 penalty. So if I was under withheld for 3/4 of the year and I was going to pay it with my return, I can still pay it July 15th, no interest from April 15th to July 15th, but I'm still going to pay whatever that underpayment penalty would have been. So that penalty doesn't go away. I think that's what she's referring to.
So also the last line, rumor has it that mail is being returned. I don't know if you guys are familiar with David Triddle. He is an international tax expert. He was saying that clients have been reporting that mail has been returned because there's no one there to receive it.
From where? The IRS?
Yep. He reported it on his personal page and then in the international tax group.
Huh.
Which is stressful, right?
It is stressful that I'm banned from being in that group, but that's a conversation for another day.
TAS has said that they are still taking cases by phone and fax. So if things are rough for a client and you need to do something, I actually recommend filing your Form 911 with TAS and working with them. They are great people. I love them. Banned for life. I saw this in a lot of groups, so I put it in here. I'm assuming most of us are familiar with what to do. If you need to stop a payment, I actually had to have this conversation with a client recently. If your client has already authorized IRS to take money out, let's say you filed the return March 20th and you put April 15th as the pay date, there's a couple ways that they can call to make sure IRS doesn't take the money. If they mail the check or they paid using a credit card on their website, they need to call the bank or their credit card agency and put a stop payment on it. There's a fee. If you did an authorized fund withdrawal, like that return that was signed March 20th with an April 15th payment coming out, you call the U.S. Treasury on the phone number there and cancel. They need 48 hours. If you also requested that your state take the money out, you need to call the state. And typically you just call their Department of Taxation, Department of Revenue line. I will tell you that the Kentucky Department of Revenue is super short-staffed right now, so the wait times are really long. And then if they used IRS direct payment, when you use direct payment, you get the email with the confirmation number. Go back in, use that confirmation number to reaccess and modify your payment. So this is something you could also put on your Facebook page, your Instagram, your Twitter, so that clients would know what to do. Apparently, Wisconsin is not open for phone calls. There we go. I know Ohio is, but every state is different. Any questions about any of these IRS's stuff? A way to get Social Security suspend garnishments. I'm assuming you would have to call Social Security.
I thought it's going to be automatic. I thought they just levy is Clarice on? Because Clarice was just talking about this the other day.
I'm Googling.
So Sandra's asking, are paper filings still being accepted? As far as I know, certified mail return receipt requested. Mark, we agree that all the automated stuff was stopped. These are just some of these other things that are out there.
It looks like some states are making information available about Social Security garnishment and what to do during COVID-19. I wouldn't want to say that's a federal thing, but you might want to check with your state.
Ready to rock and roll? What's the next piece?
The next piece involves math. This is the later section. Tax filing 2020 considerations. This is also an opportunity for most of us to make our money. Now, more money. More money. Charitable contributions. This is really nice, actually. I think $300 above the line deduction for standard deduction filers. So a lot of people now are standard deduction filers because of the increased standard deduction due to TCJA. So a lot of people lost the charitable deduction ability to take that. And from my understanding, as a result, charitable deductions actually went down. This is really nice. So standard deduction filers can get a $300 above the line deduction. So that reduces their AGI. It's to any charity. It does not include private foundations. For itemized filers, instead of writing off 60% of what they deduct, they can write off 100%. This is really great. It's only cash gifts to public charities. So if you have someone who's like, I gave $1,000 worth of stuff to Goodwill. Nope, they don't get that additional 40%. Public foundations will run by the old rules. They are not going to get this extra deduction. And then food inventory contributions can be 25%, not 15%, which is great, I think. And finally, SE tax. Why did I put the Monopoly Man there? I put him there because he is so excited that as a self-employed person, he could actually keep some more money in his pocket. I want to see if I can do this. You guys see that smiley face? Oh, Patricia says that practitioner priority. No, PPP is up and running. Sorry. That's the loan thing. I got excited. Maybe practitioner priority service is running. So this is a chance for us to get some money. It's also a reminder that not every state extended their tax filing due date to July 15th. For example, Virginia is June 1st. So I know many of us are thinking, oh, July 15th, depends on your state. Additionally, not every state extended their estimated tax payments. The majority of the states only extended the 1st. So that second quarter is still going to be due June 15th. So late May, early June, we're going to be busy getting those estimated tax payments out. These credits here are something that you're going to want to talk to your self-employed taxpayers about to see if it's something that they could use to help them with their estimated tax payments and get some money, keep some money in their pocket. So we're going to talk about the sick leave credit, the paid family leave credit, and the self-employment tax deferment, also known as the payroll tax credit. So Fred talked a little bit about this. I have real life examples. So your sick leave credit applies if your taxpayer is self-employed and would have been eligible for paid sick leave if they were employed by someone required to offer sick leave. And what's cool about this, it is a refundable credit. So if you are self-employed under IRC 1402, you carry on a regular trade or business, this is something that is good for you. Now, when I looked at 1402, it says it excludes rentals from real estate and personal property leased with real estate. That's what the statute says. I'm not really sure. I would imagine someone with more experience with rental state people would have more knowledge about this. There we go. For those who are like, oh, what's the state? AICPA has a really great chart. It's state by state of what each state is extending and what the date it's going to be extended on.
Yeah, that's outside their firewall, and we do have it posted in the Facebook group.
So an eligible employer is someone who would have been required to offer paid sick leave under the Families First Corona Response Act. That's the one that came out before CARES Act. A self-employed individual will receive an income tax credit to offset their federal self-employment tax equal to qualified sick leave or family leave. And what that means is they give 6 different things. One is if you're sick. The family one is if someone in your family is sick. So here's the sick leave one. Oh. If an eligible self-employed person is unable to work because the individual is in a federal, state, local quarantine or an isolation order related to COVID-19, has been advised by a healthcare provider to self-quarantine, or is experiencing symptoms of COVID-19 and seeking a medical diagnosis, they're eligible for the sick leave credit. The sick leave credit is the number of days multiplied the lesser of 511 per day up to 10 days. 100% of the average daily self-employment income. The cap is 10 days. The maximum credit for this is $5,110. So here's an example. Jared is a roofing contractor. He has COVID-19-like symptoms. He was asked to stay home until he can get tested. I don't know about you guys, but in Ohio, you actually have to go to the hospital and be experiencing symptoms to get tested. I know other states have more tests, so they're more liberal in their testing. Jared cannot work for 14 days to ensure he is over the virus. And his doctor says you need to stay home an additional 7 days to reduce any asymptomatic spreading of the virus. He has a net SE income of $45,000 a year. Roofs are expensive, right? That's not unusual. So how you would do it is it's $45,000 divided by 260. That's 260 days. And you find out that his average SE income is $173. 173 versus 511. 173 is less times 10. 1730 is his refundable credit. IRS is telling you to say 260 days. It's not a number I just made up because I like 260 more than 365. Although actually, wouldn't this year be 366? Or is this year 365 and everything else is 364? That sounds like a Jeopardy trivia question. It's net self-employment income, not gross. Then let's say you have a self-employed individual who is unable to work or telework because the individual is taking care of someone subject to a quarantine order or been advised by a healthcare provider to stay home for COVID-19, is caring for a child if the child's school or place of care has been closed. And I think for most of us, our schools are closed, at least through May 1st for every state. Is that about true? No, not every state, but most. And then is experiencing any other substantially similar conditions specified by the Secretary of Human Health Services in consultation with TRESSEC and LaborSec. For those who were in the business one, Fred used me as an example. My kid is home from school right now, so I can't work, but I can telework. I remote in, so I cannot take this. But in some cases, people who can't telework, who are self-employed, have to claim this. The credit is the number of days the taxpayer can't work, multiplied by the lesser of $200 or 67% of the average daily self-employment income. This is math. I'm assuming someone out there has a really sexy Excel spreadsheet where this math is done for you. I don't have that spreadsheet. I had to use a calculator. So Ashley is a location scout for the film industry. She can't work because her child's school is closed. Her Schedule C net is 30,000. So 30,000 divided by 260. 2/3 of that is 115 a day times 10 days is 11,150. It's the max credit's 2,000, so you take the smaller amount. IRS is going to be issuing some documentation guidelines soon. So for the rest of us who are like, well, what are we going to ask our clients in order to get this information? Like, first of all, like, one thing I would think about is how do you ask a client if they were sick? Like, that's a violation of HIPAA guidelines when you're like, I need evidence that you were ill. So I got a lot of this from the IRS FFCR FAQ, which is in the COVID-19 resources Pathfinder I put in there. I think their FAQ right now is probably one of the most thorough pieces of information out there, but they're probably going to have to issue some more guidelines for us in the future in order for us to be able to. I'm wondering if this is going to be another due diligence thing, like another 8867 thing where you're going to have to ask a bunch of questions to be like, this is what I did, this is what I documented.
I think all refundable credits are 8867 now. So yeah.
So those of us who thought, this postcard tax return thing, that's gone. No postcard tax return for us anymore. Caveat emptor, which is fancy for buyer beware.
Hey, can I ask a polling question?
Yeah, you can go ahead. I'm so sorry.
Oh, that's so nice of you. Thank you. So again, you need to answer the questions to show you are attentive. You don't need to get it right. We sure hope that you do. And in the spirit of what OPR wants us doing, this is a reinforcement question. What is true about charitable contributions for years after December 31st, 2019? There is a $500 deduction available for non-itemizers. The 60% of AGI floor is now 100%. Food inventory contributions are reduced to a 15% ceiling. Only one of these three is correct. Hi, Ellie.
What?
I said hi, comma,
Hi.
Ellie.
I was reading. I'm sorry. I won't read anymore.
You were interneting. I won't ask you what Facebook post you were reading, but that's okay.
I was reading the chat thing right here. Because Fred said no to something, and I'm trying to figure out what he said no to. Is he saying no to me?
You know, there's a way to block Fred if you right-click. There's a way to block posters.
I can't block him.
There's 5 of you who haven't answered. I'd like to close this up.
I'm the tax apprentice.
No. Going once. Going twice. I'm going to close. Okay, so this was a tough one. So 81% of you got the got B, which is the correct answer. The 60% of AGI floor is now 100%. It had been 50. It went to 60 under Tax Cut and Job Act. Well, now it's 100%. So you can give away everything you earned if you want.
I call myself a tax apprentice, Renata, and the idea that, in certain trades, you do an apprenticeship, you do a journeymanship, and then you get master. And so I've only been doing this for this is my 6th tax season. I'm very young. I don't know what a record player is. And so I'm in training with Fred, essentially. Beats me, makes me cry. No crying, no lying, no dying in tax season. Those are the rules.
So the other two answers, answer A, there is a $500 deduction available for non-itemizers. That's not true. 13% of you thought that. It's actually $300. And food inventory contributions are reduced to a 15% ceiling. Actually, they're increased from 15 to 25. So we might want to refresh. I guess nobody itemizes, but this year there's going to be an uptick. 95% of your people who file a tax return are going to give $495 to charity because they don't want to give the max, but they don't want to let too much money get away.
Ooh, Donna, that doesn't sound good. You should join us. All right, so caveat emptor. My Latin is terrible. I took it from a medievalist, not a classist. I'm really sorry. So my pronunciation is probably off. If an individual works as an independent contractor, but they receive wages from another job, they have to reduce their self-employment sick leave credit or family leave that they can take on their return. No lying, no crying, no dying. So if our good friend Ashley in the last example worked for an eligible employer, and she also worked as an IC film scout, her eligible employer had to offer paid family leave. She would need to adjust her credit. This is a lot of math for us, so I'm imagining our tax fees are going to go up next year. So as you can see, I put some examples. I basically stole the IRS example because I thought it was really clear, and they already did the math for me. You cannot reduce the credit below 0. The one thing that I was thinking about that I didn't find an answer on is, let's say you're an MLM person. Let's say you're at home selling Lululemon leggings, but you also are teleworking. Are you eligible for this credit? I'm going to go like, no.
What about the top?
That's my sense, but I imagine IRS again will be like, here's some guidance for you guys. So this is a nice one, the self-employment payroll tax deferral. And again, here's some planning opportunities for people. 50% of the self-employment tax incurred during 2020 can be deferred when filing and paying the 2020 tax return. It is a graduated payback. Basically, you file your 1040, you include 50% then. You pay the rest of it by pay 25% by 12/31/2020, and then the remainder by 12/31/2022. If your self-employed person applies for PPP next week and they get it, they cannot take this credit. So in your calculations for your client, you need to figure out which one is a better look for them. Again, tax planning opportunities galore. So this is our girl, Ray. See? Ray is an independent artist. She scavenged materials and makes things from them. And she has a $5,000 SE tax bill for 2020. With no estimated tax penalty, she can pay $2,500 with her 1040 and then defer the following. $1,250 by the end of 2021. And then the rest of $1,250 by the end of 2022. That keeps money in her pocket. That's great. So like I said, this is a planning opportunity. If we take our buddy Jared, the roofing contractor, his SE tax is about $6,300 a year. If he does the 1730 sick leave credit, that means his SE tax is dropped, and then you get the deferral. He's going to get an extra $2,500 in his pocket for this year. That's a lot of money, I mean, maybe not in San Francisco, but in a lot of places, that's money that the taxpayer can use to pay their rent, utilities, order alcohol through Uber Eats or Amazon Prime, depending on your state. In Ohio, you can't order hard A to be delivered to you, only beer and wine. So again, this is a way for you to get money during non-tax season. This is a planning opportunity for you. They pay you what? $50, $75 to play with your Excel that you will set up, and they're going to save a couple grand. They're going to be feeling pretty happy. The SE tax deferral for 2019, I'm not sure what you mean. The payroll is different.
No, you're going to cover it. You're 2 slides away, I think, from it.
Am I? You know
Yeah.
me better than I do.
Okay.
There are other business provisions in the CARES Act. Fred addressed these. AMT, net operating loss, reduction of the Section 163J credit, excess loss limitations. Everybody's happy about the QUIP thing. I put a question mark there for an amendment. Could be an opportunity for you to make some money doing amendments. Section 139 disaster payments are really great. You can give money to your employees to cover certain things. Like if you're having them work for home and they have to buy more paper because they're printing stuff out for you, you can give them money so that they can buy that more paper. 100% deductible for you, not taxed to the employee, does not appear on their W-2. Super awesome, right? SBA loans, employee retention credit. Fred covered all of that. If you didn't get to see it, John's going to make the replay available. So here's some things that I think regular people care about, everyone who's regular. There's a 60-day moratorium on foreclosures of federally backed mortgages and 100 days forbearance of foreclosures. The borrower must request the forbearance, and this includes 120 days of eviction moratorium for any renters in those properties. In the New York Times link that I put in, that's just sort of like an FAQ on this stuff, they include the link to the National Home Lender database to see if your bank is one of those banks that gave you a federally backed mortgage. Landlords cannot charge any fees or penalties for non-payment of rent. And some states are saying that small businesses don't have to pay rent, no problems. Like in Ohio, they're saying if you're a small business and you're trying to make ends meet, don't worry about rent, worry about payroll. Unemployment insurance is not eligible for nonprofits, which is great. And there's no damage to credit reports beginning 1/31/2020 through 120 days after the end of the national emergency declaration. Experian came out and said, listen, we can't be guaranteed to get this correct, so just check your credit report. And if you see that we are damaging your credit, do a COVID-19 related emergency, like you can't pay your visa anymore, you need to reach out to them and file a dispute.
That seems predatory and lazy, as one of our colleagues on here would say, because they could just turn off credit reporting. Instead, they're going to leave it on you to catch the error. It's like a CP2000. You have to be smart enough to know it might be wrong and try and get it corrected. That's not fair.
So I used to be a librarian, and Susie, it's the credit reports are specific to all debts. The forbearance is for mortgages. The 1730 credit for Jared is the sick leave equivalent credit.
Hey, Ellie, I just want to get in a one more polling question. There's 2 more to go, right? There's a bonus question at the end, but I want to get this in right now because anybody that has to go, this is 100 minutes. If you were on for the entire time and answered 3/4 of the polling questions, you could go and have your credit. What statement is true about the 2020 self-employment tax deferral? The deferral is only available to employers. 50% is due by December 31st, 2021, and the balance is due December 31st, 2022. The deferral can be combined with a Paycheck Protection Program loan. Maybe I made this one too easy. This is the question she was asking about, Ellie. We actually already covered it on slide 54.
Oh, great.
51, sorry. Okay, 9 more of you need to reply, please.
I agree with you, Julia.
Okay, so let's close this real quick.
Story behind.
Ironically, I would have thought this was a gimme, but it wasn't. So, what statement is true about the 2020 self-employment tax deferral?
As
Okay.
my bad. I must not have explained it fast. I must not have explained it quickly.
So 50% is due by December 31st, 2021, and 50% by December 31st, 2022. That's the correct answer. 87% of you got that. So I wanted to make one comment here that I didn't make when you had the slide up. I don't understand why they didn't treat this like the years that you could do a Roth IRA, a conversion to a Roth IRA, and the tax bill would be due over 2 years. I don't understand why this isn't added on to the tax return. So for those years, what are they going to do? Mail you a separate bill? It says, oh, by the way, you owe us this money. It's going to be very strange how that works out. It can't be combined with a PPP loan. And this isn't for employers. It's for the self-employed. So back to you in the studio, Ellie.
Okay. Just a few things for researching online. I noticed in the Facebook questions, there were lots of questions that were like repeat questions or things that were solved with a simple Google search. Not a lot of people actually know how to use Google correctly or they research correctly. I know this because I used to be a librarian. You always need to be skeptical. Who is publishing this information? What is their goal? When was it published? Particularly now. If you don't see the date at the top, it's usually at the bottom of the page. Information is changing so quickly that something that may have been published, March 31st is no longer valid now. Sandra, yes, 50% is due with return, and then the remaining 50% is split. I said use Wikipedia correctly. So a lot of Wikipedia pages are actually run by organizations or nonprofits, like the Willa Cather page. From those of us who remember Maya Antonia, is actually run by the Willa Cather House. Their bibliographies are where to go. You don't necessarily want to trust what's written, but what you want to do is go to the bibliography where the links are and scroll down there and see where those links take you. That's also really important because you have somebody writing something on Wikipedia that is their interpretation. It might not be the right interpretation of the links, so you want to click on that. You use unique, specific terms when you're searching in Google. Don't write a full sentence. CARES Act, if you just go into Google and drop CARES Act, you're going to get 282 million results. That's a lot to go through. And remember, Google doesn't sort by accuracy or relevancy. It sorts by clicks. The top articles are the ones with the most clicks. 97% of users only click the first 3 articles. And then Google says they're improving that feature. I mean, most of us use Google. I think if you're going to do academic research, you should check an academic database. Your library should let you have access to something like by EBSCOhost. But since most of us are using Google, here are some basic things that I would tell my students. Use quotation marks to keep terms together. If you just put in retirement benefits, Google doesn't know you want to keep them together. Their AI is going to think you do, but if you put quotes around it, they're going to stay together. You're going to find them together in a sentence. You can narrow your search to reliable sites, .edu, .gov, .org. If you were to put Thomas Jefferson in quotes, site.edu, you're only going to get university sites on Thomas Jefferson. You're not going to get like the Monticello site. And this is really important. You can also, when you're searching something like tax law, you could put something like dependent site irs.gov, and you're only going to get what IRS has on dependents. And then I put a bunch of operators that are useful to think about when trying to have a better search. And I linked to the Google site. And what's cool is if you click on that Google site, there are more operators and it takes you to the advanced search engine. And Google also has an image search now. Yeah, I broke John. Sorry about that, Mark. So I think this is really important because all of us are going to be using research, and having an effective Boolean search is makes our life easier.
You're going to do, you don't know this yet, you're going to do a 30-minute webinar, and then we'll get it up on Google, on YouTube.
A 30-minute webinar on what?
Effective searching of anything, and then that might become the basic for then we can do an effective searching with free tools for tax stuff. But first, they need to get all of this down.
Okay.
Don't worry about it. I'll tell you what to do.
Let's go ask my librarian buddies for friends.
Ah.
Librarian friends.
All right, so
Questions, please complete your evaluation.
let me pop up the last polling question for those that need the bonus. Then we're going to stay. Does my taxes loves the idea? That's awesome. Let me, by the way, that one of the best websites ever, right? Doesmytaxes.com. Let's see. Let me ask the last question. So those that have no more, I'm going to ask the last poll. So those of you that want to go can call it a day. I found this webinar to contain information I didn't know. Was a great review. Thank you. Wasn't the best use of my time.
I will say, thinking about ways to communicate to your client, BQ Tax Pro has our COVID-19 library. You can go there for a really great example. I'm not just saying that because I work there. But for those of you who know Olivia Henley, the Numbers Queen Limited, she has created a blog where she's putting links up that she can refer clients to. That's also just a really good way to do it as well.
And as you said, the more people that click your link, the more valid it becomes to Facebook. I mean, to Google.
Well, like, I also think it's important to remember for those of us who are in larger offices, like, we have staff answering phones who may not know things. And if we can direct the client to someplace, like, one of my biggest pet peeves, and I know me using like all the time is a pet peeve for people, but like, I totally can't help it. I'm a Valley girl. And my time in New York and Buffalo did not beat that out of me. I'm so sorry, you guys. They tried so hard. One of my biggest pet peeves is when clients call and they won't tell you what it's about. And that's a really hard skill to gain, is to get from clients what they're trying to get from, like, what they want to talk to someone. Like, well, I want to talk to Fred. Okay, well, you know, in order for Fred to better prepare for your phone call, what is your call about? Being able to also refer them helps them direct their questions more carefully so that they're making better use of Fred's time or my time or Kathy's time or your time, John, than just sort of being like, well, I saw this thing on New York Times and I don't know what it was. Can you tell me what it's about? Okay, what did you see?
All right, so let's wrap up the questions and get folks out the door. All sorts of Circular 230 stuff that I think we've addressed. So as you know, you can't negotiate a client check. You can't do a direct deposit to your account for an unbanked person. You can't even, my opinion, although I've been told I'm wrong, I can't even take a client check to the bank. I can't write deposit only, because that is effectively negotiating a check.
Yeah, that's a Circ 230 violation.
Yeah, I agree. Thank you, John. Thank you, John. John looks tired, someone said. John's got plenty of time. Effective research from El Presidente-elect, Mr. Rosenberg. Thank you. Sandra. Wow, I don't see anything new coming in on the questions. Have we got everything? Going once? Going
John,
twice?
like, you can try to do a relationship with a bank like Santa Barbara or River City and have them take the refund and print, and you can print a check at your office or do a debit card. That's something that is an option for your clients who don't have bank accounts.
All right. Ellie, you got anything to close us out with? So I'm going to say something. Was this your first full, long, 100-minute webinar?
Who, me?
Yeah.
Yeah.
Yeah. So this is Ellie's. I
did that 15-minute one with you and Angela in August.
Right. That was a chat more than a class. This was a class. Ellie wrote it. Ellie put it together. Ellie looked at the the completeness of it, and I don't think Fred or I being on the webinar was good for her. But anyway, awesome job. Everybody, stay healthy. And
thanks, everybody.
yeah, if you need anything, all right. So before we go, the handouts, apparently in the beginning, 2 of the handouts weren't enabled, and now they are. So there's 3 handouts. There's a copy of the PowerPoints. There's a CARES Act document summary, and the COVID-19 Pathfinder document that Ellie mentioned several times that's there in Word. So there are 3 documents there to download. If you can't get them, down, email me, and I'll have John at Tax Practice Pro, or my assistant, Nicole. Actually, this company, she's a project manager, Nicole at taxpracticepro.com, and we'll get them out to you, anything you need. Give me a week on the CE and the certificates. Tom, to the right, there's to the right of the Q&A tab, it says handouts. It says chat, Q&A, polls, handouts. Julia, yes, just email me.
If you're not getting the COVID-19 Pathfinder for whatever reason, please email me at Ellie, E-L-L-I-E, at bqtaxpro.com, and I will I'll email that to you. Let me see if I can get Emmy over here.
You guys should be able to get it now. In the beginning, you couldn't, but give it a shot again.
Mijo, vente, por favor.
Did she? I have no idea what happened to my camera or what happened to Ellie. Diana, there'll be evaluations in a follow-up email.
He came by, but my camera turned off. Sorry.